in today's episode, tax withholding. No, it's not a sexy term. It's not glossy. Nobody wants to pay more to the IRS and Treasury Department than they legally have to. But as a citizen of the United States, as someone who is a U.S. citizen, or even if you're not a U.S. citizen, but you are making money in America, you have an obligation to pay your fair share of taxes.
Welcome to the Tax Relief with Timalyn Bowens podcast. Are you behind on taxes? Is the IRS threatening you or your business? Are you overwhelmed and confused about how to resolve your tax issues? Let's join Timalyn as she explains your options and how she may be able to help. Timalyn Bowens is America's favorite EA.
Hey, family. Welcome to episode 86 of the Tax Relief with Timalyn Bowens podcast. We're wrapping up the first week of June, and if you're not familiar with what this time of year signifies for those of us who do tax representation work, it is time for some serious IRS notices to start going out. I always tell people this is my busy season. And as people are looking at these notices and they're worried about what to do next and putting their head in the sand, I like to remind folks that number one, if you can't make payment in full, the thing that you need to do is communicate with the IRS. They are willing to work with you to set up some type of arrangement that will satisfy them and not bankrupt you. But we can't get to that point without communication. And then you have to get into tax compliance. We have to make sure that we have at least the last 6 years of tax returns filed before we can dare ask for a payment arrangement. But then you also need to get into compliance with your tax withholding and estimated payments. And that's actually what we're going to be talking about in today's episode, tax withholding. No, it's not a sexy term. It's not glossy. Nobody wants to pay more to the IRS and Treasury Department than they legally have to. But as a citizen of the United States, as someone who is a U.S. citizen, or even if you're not a U.S. citizen, but you are making money in America, you have an obligation to pay your fair share of taxes. Now, not to get political or anything, there, of course, have been people on both sides of what is actually fair share, and we could go back and forth all day debating that, right? But as it stands right now, we have a pay-as-you-go tax system, which means that you are responsible for paying into the tax system as you earn throughout the year. For those of you who have wages that you earn through W-2 employment, you'll notice that each paycheck, your employer is withholding an amount of taxes on your behalf, and they are submitting that to the IRS each time you get paid. That's pay as you go. Now, let's say you're one of those people that likes to live adventurous and on the dangerous side of life, and for whatever reason, maybe you put exempt on there, even though you likely shouldn't be. Your employer is yet withholding Social Security and Medicare. That's a non-negotiable. Of course, there are exceptions like for pastors at churches who are employees. Social Security and Medicare are not withheld. Then we do have some state government institutions where Social Security and Medicare is not withheld because they pay into a pension. I'm not talking about those exceptions right now, okay? I'm talking about people who are wage earners. They have that Social Security and Medicare withheld, which is roughly going to be about 7.65% of your wages, right? And then if you live in a state that has income tax, they're withholding that state income tax and also the local income tax as well. Because again, you are obligated to pay as you go. Now, what happens if you don't have the taxes withheld throughout the year? Well, that's when you get that balance when you go to file in April. And some of you, even though you've gone exempt on the W-4, still like to act surprised every spring when you have that big balance. Now, tax withholding doesn't just apply to wage earners, though. Okay. If you have pension income, you also are subject to tax withholding. If you make a distribution from a retirement account, whether you're actually retired or not, it's your responsibility to make sure that the proper amount of taxes is withheld. And check this out. Even if you receive Social Security income, the IRS has a provisional income test. And if the majority of your income is not from Social Security, you can be taxed on part of that Social Security up to, I believe it's either 80 or 85%. Charge my head, not my heart, if I said the wrong number. It is 80 or 85%. So part of that income becomes taxable. You can't claim ignorance when it comes to tax withholding. No, they don't teach it in school. Maybe they should, but you're blessed and you stumbled upon this podcast episode today. So now you know, and you don't have any excuses, right? So I've already said when you don't have enough withheld or you don't have anything withheld, that's when we have a tax bill. When you overpay, then you end up getting a tax refund. And you may have heard people say, that's why I don't withhold anything throughout the year because I'm not going to give the government an interest-free loan. Well, check this out. Tax withholding is somewhat of an art and science, right? I like to get people as close to zero as possible, but I feel you on not wanting to give the government an interest-free loan. However, when you do not have the proper amount of taxes withheld throughout the year, you can set yourself up for not only a failure to file, or not failure to file, I'm sorry, a failure to pay penalty, but also an underestimated tax penalty, which means you didn't have enough withheld throughout the year to cover your tax liability when you filed. Now, as you're listening to this, you may be thinking, well, whatever. I don't have wages. I don't have a pension and I don't have Social Security income. So I'm good. I don't have to do anything throughout the year because I'm not getting consistent paychecks because I have rental income or I live off my dividends and interest. I'm self-employed. Well, guess what? Withholding does yet apply for you too. You just have to do it on your own because you don't have the employer. Now, for those who have income coming in and it's not through an employer, you are to make what's called estimated quarterly payments. And just like it's implied by quarterly, these are due 4 times a year. We have January 15th. That's when your quarter 4 payment should be made for October, November, December. Then we have April 15th, which, yes, traditionally is the 1040 individual taxpayer deadline to file and to pay for that year, but also that date, your Q1 estimated quarterly payment is due that day. Next, we have June 15th. That's when Q2 is due. Then we have Q3, which is due September 15th. And I've already said January 15th is when Q4 is due. Now, you may be thinking, well, I don't want to file my taxes quarterly. For income tax purposes, you're not filing quarterly, you're paying quarterly. But let me give you this insight. If you are self-employed and you're like, you know what, I don't think I can manage to do this quarterly. That just seems like a lot. I want to let you know, first off, it is a lot. And if you've been around here for a while, you already know what I say, like quarterly estimated tax payments hurt my feelings. To stick with the habit that you have of not seeing that money each paycheck, what you can do is make payments more often than once a quarter. Because here's the thing. For the most part, the IRS, if you're in compliance, is not going to turn down money, right? So if it makes more sense for you, let's say you get paid monthly from rental income, then you set that money aside monthly. You make that payment in monthly to make sure that you are actually fulfilling your obligation to pay as you go. All right. Now, if you're listening to this and you're like, I don't even know where to start with that, the IRS has a free withholding estimator on its website where you can look and take your latest check stubs and you can make guesstimates of dividend and interest income and rental income and figure out what you should be withholding or paying in quarterly. Now, I think it's pretty straightforward, but of course I work in tax world. So if the withholding forms, the W-4s for my wage earners, the W-4P for my pension earners, the W-4V for my people who may be on unemployment or receiving Social Security. If you feel like the IRS tax withholding estimator is going to be above your head and you like the way that I explain certain things, you can go to the America's Favorite EA YouTube channel, and I do have videos that walk you through the process. Now, I do different scenarios. The W-4P for married filing jointly still has to be published. I apologize in advance. It's not out yet, but you will see scenarios for married filing single for 2026. I'm sorry, not married filing single. My goodness, it's the end of the week and I need to go to bed. You will see examples for single, married filing separately, married filing jointly, head of household. Now, I will say if you're married filing jointly and you go listen, I did make a mistake in that video for people who itemize. If you don't itemize, don't worry about that mistake. If you do itemize, make sure that you check the caption for the correction to the video, okay? For my people who receive pensions, your video is live if you are single, and I believe I may have done head of household. If you are married filing jointly, give me another week to actually get that video up there. This podcast is being released on June 5th. So if it's June 12th or past 2026, your 2026 married filing jointly W-4P video should be live. Okay. Now, if you're like, I have wages, but I have way more self-employment income or rental income, dividend income, K1 income, whatever the case may be, I do have a video for doing estimated tax payments in that calculation. However, it is dated. If you all would like for me to do a video for 2026 on how to calculate your estimated tax payments, let me know down in the comments of whatever platform you're streaming this podcast from, and I'll see what we can do. Okay, because even if you don't have the full payment in by April 15th, when you file your taxes next year, I need you to keep in mind that April 15th, even if you file an extension, is yet the due date for you to pay your taxes. Penalties and interest will begin accruing if you don't get it paid by that date. All right. But we still want to keep your penalties and interest at a minimum. So you don't have the balance to pay in full on April 15th. Make sure you get a timely extension in or still file the return. Right? We want to make sure that you don't get hit with the underpayment of estimated tax penalty. We want to, as close as we can, pay at least 100% of whatever your tax liability was for last year. Or If you made significantly more money in this year, we want to make sure that you've paid 90% of the liability. So let me give you an example. And reminder, tax liability and tax refund are not the same thing. Just because you got a tax refund doesn't mean you didn't have a tax liability. So you'll want to look on page 2 of your last return and look to see what the actual tax liability is up near the top. That is what you were paying toward throughout the year, unless, of course, you've gone exempt or you haven't made estimated tax payments. Now, let's say that your liability for this year was $30,000, right? But you paid in $33,000. That would result in a $3,000 refund. All right. Now, let's say for the next year, your tax liability has gone up because your income has gone up to $40,000. All right. To avoid an underestimated tax penalty, you would have to pay in at least $30,000. All right. The reason that they would still accept that, even though it's 75% of the tax versus the 90%, is because you paid 100% of what you owed in the previous year. But if we're looking at the 90% threshold, because let's say that the previous year your liability was 50,000 and it went down to 40,000, then that's when we would look at the 90% and you'd have to pay at least $36,000 in to avoid the underestimated tax penalty. Now, I just got really excited talking about that, so I know I probably slipped up a little bit into taxing these. That was not my intention at all. I just want to make sure that you are equipped to, again, keep your penalties and interest as low as possible. So, your takeaways from this: do a tax withholding checkup, okay? You want to review your most recent check stubs and run them into the IRS withholding estimator. Make sure that you were on par to not have a tax liability next year. If you have wage income, make sure the withholding on your W-4 is correct. If it's a pension or an IRA or an annuity, you fill out a W-4P to adjust your withholding. Again, if it's a government payment like unemployment or Social Security, you adjust those with Form W-4V. And if you need to make estimated quarterly payments, you can do that calculation on Form 1040-ES, and that will help you figure the estimates for all 4 quarters. Now, check this out, dear. I always tell you all I have a lot of free resources like this here podcast, opening tax tips with Timalyn backup for free, because I've decided to go in a different direction to be able to reach and help more people. Those are available for you if you can't afford the service to have it done for you. If you would like for me to calculate your estimated tax payments or your pension withholding, wage withholding, you can book that type of appointment with me at bowenstaxsolutions.com, and you will go to book now and pick the appropriate call. Yes, it is a paid call because you have my time and expertise to do something customized for you. If you can't afford to do the paid call, then again, there are the free resources on the YouTube channel, America's Favorite EA. There's an article to walk you through the process of the W-4 on tax tips with Timalyn. You do have free resources available. All right. Again, just know that if you give me a call or if you send me an email about your withholding, I'm going to send you the link for you to book the paid call. All right. And again, If that's not the way you want to go, you have YouTube, you have other tax professionals that could potentially help you with that. But of course, they're not America's favorite EA, right? But even if it's not me, just make sure you get the help you need. All right. I hope that this podcast episode helps you avoid tax issues in the future. If you're in tax trouble right now, again, want to invite you to book a call with me because I want to help as many people as I can fill the tax literacy gap one taxpayer at a time. Just being able to help you stop the bleeding means all the world to me. All right. So thank you for joining me here on episode 86. I'll see you all in 2 weeks for episode 87 of the Tax Relief with Timalyn Bowens podcast. I'd like to thank you for taking the time to listen today. I'd like to thank Jim Ray Consulting Services for helping me get this message out to you. I hope you found the information helpful. Did you know 1 in 50 people have a tax problem? Please share this episode with your friends and family because you never know who may need help. Again, thanks for listening. Hey, just as a reminder, this podcast is for informational and educational purposes only. It provides a framework and possible solutions for solving your tax problems, but it is not legally binding. Please consult your tax professional regarding your specific tax situation.